Thank you so much for your time on the show today, David. And let's first guess what we're seeing here from investors. What's the feelers here? We're seeing the market strong gains today, up 1.73%.
Thank you for having me, Kenneth. So what we are seeing in the market is a gradual, resumption of positive sentiments back into the market. One of the things that we had feared was that due to some of the new developments in the fixed income space, we might have started to see, that downward trend in the markets. But on the contrary, what we saw today was a trend that shows that there's still a lot more positive sentiments towards the equities market. I think the market closed up about 1.7 today or thereabouts. So it's showing that there's still a lot of liquidity. I mean, the positive sentiment is still there, and that should start to filter into the markets this week.
All right, and last week the story was that the analysts were waiting to see what those special bills was going to be and how it was going to shift sentiments in the market. We saw the first auction on those bills last week. And for you, well, though, how do you think the market reacted to this? And do we see investors still more or less preferring equities over the fixed income space?
Yes. So when the bills came out last week, I think about 4.1 trillion that was issued by the central bank last week. That's sort of attracted a lot of attention. And from an equity perspective, the fear was that since another avenue for liquidity has you know another avenue has shown, so that might tend to direct a lot more funds to that market. So the fear was that investors might have seen another alternative for the to the equities market. But on the contrary, if you look at the rates, there's still a lot more. Okay, before we even talk about the rates, there's still a lot more uncertainty as to how the secondary markets for these special bills will react. Still a lot of things that are yet to be unknown. So as of now, the yields on that are, I think about, I mean, they're still quite low. So it's still insufficient, when you're looking at it from an inflation perspective. So I think the best bet now still remains equities when you're still looking at the dividend yield and also the prospect of possible, capital appreciation as well. So for a lot of investors, the equity still, holds, a lot of appeal. So I'm sure that that is what is filtering into the market. People just taking bargain hunting positions on some of those, counters that were sold off last week.
Well, now let's talk about the bargain hunting we're seeing and the appeal we're seeing from the equity space here. Looking at some of the players that came out on the top of the charts today on the gainers list, we're seeing Airtel Africa, Dangote Cement, Guinness, and Lafarge Wabco. What's the sentiments for investors looking at these companies, and what do the fundamentals say?
For some of these companies, when you look at the industrials, the Danksem, the WAPCO and the likes, you see that from a fundamental perspective, they've actually done quite well this year, and the outlook is still very much positive for some of them. I think for some of the others, there's still some more weakness in their performance, and from a fundamental perspective, they might not hold as much appeal as some of the other names. But I think the overriding sentiment at this point is still less of fundamentals and more of how is liquidity in the markets, how is how I mean the demand from investors, how is that shaping up? I think the factors are still very much at play. The liquidity is still very much at play, and that will set to even override much of the fundamentals. So we'll still see that positive sentiment on those value names on the exchange.
All right, it's the last trading week before the Christmas week, and I'm trying to understand if this performance we're seeing today is a one-off or if we're going to see this sustain in the course of the week.
Okay, really also from our own perspective, like I said earlier, there's still a lot of uncertainty, particularly as regards what the developments in the fixed income markets would be, and most notably with regards to these new special bills, some forthcoming auctions that we're likely to see even before the year runs out as well. So those are possible outlets for liquidity, and investors will want to weigh that vis-a-vis, what they've gotten in the equity space. So we can see, I mean, we can rightly expect that some of the investors that have made pretty decent gains, we want to realize some of those profits and just just take some of those profits. While that should be counterbalanced by people that have been looking for an avenue to enter at not so high prices. So like I said, a lot of that is still finely balanced. One of the what would just be expected is that depending on how this plays out, what happens in that space, then that also has an effect on how the equity markets will play out. But for now, what we are seeing is that the demand for equity still remains it's weakening, yes, but it still remains pretty robust compared to from where we're coming from mid-year and the likes.